Good evening. Ira Epstein, and here we are with your financial market wrap-up. In this wrap-up, I'm a little early. It's 5:25 p.m. Central Time. I would have even been earlier, but I was doing some TV interviews just now and got through with that. It's an interesting day. It is, as you know, Wednesday, and we're at the 5th of February, and the stock market put on a nice rally today. It's continuing it. Tonight, you're backing off a bit in the metals. You saw the dollar come down, and the dollar's interesting here. If you remember, my last special report I did was about 3 weeks ago, and I'm dying to do another one, and I scoured today, what do I want to do it on, and didn't come to a decision yet, but I will. And I remember saying when the market was up, not to buy right there, that I thought you'd get a break, and then I think you can go to the price count, the third price count, and that's where the market would have serious trouble. And that number was around 109. I'm going from memory here, 109.83, something like that. You take a look at what the dollar did, and from there, just recently you hit it. I'm talking this week. Again, second time, and now you're nosediving again. Was that it for the dollar short term? It could be. I wasn't ready to say that. Interesting. When I look at the bonds and the notes, they have been getting bids, and you've taken the 10-year note down to about 4.2%. Why? It's not because the economy's slowing. Markets don't trust anything right now. They don't know what to do. DeepSeek screwed up the thinking on AI. It's that simple. I want to use that word. People are going, do you really have to spend all that money? And while you got Meta saying, yes, you do, we're going to find out, I think tomorrow, what Amazon's saying. That's going to impact everything. And then you've had all these, so to speak, tariff wars. Now, not everybody gets treated equally on a tariff war. China gets treated much different than Canada or Mexico because their economy is so much bigger. On the other hand, our allies are on both sides of us. I don't completely agree with President Trump, but since he didn't put the tariffs on him, that's it. Number two, when you have an economy that's humming like ours is, and you have other economies that are slowing down, and all you're doing is complaining about a trade deficit, you got to dig in, why is the trade deficit there? If it's there because your economy's humming, theirs isn't, and you can get their goods at a great price, is that the worst thing in the world? I don't know. What I can tell you is, you get a big economy like China's and you get some imbalance. That's a whole different thing. But our two trade partners, I don't know. All right, you got to look and see what's fair. If everybody didn't have tariffs on, I'm talking Mexico and Canada, that would be a different ballgame. Then you'd have what I call a much better playing field. But as you know, in politics, you protect your voters and you get what's called a lobby. And the lobby comes together and says, hey, John, we don't really want to sell that lumber coming in. Things you got to worry about. An hour ago, about 4:30, I saw an article come across my news, and I didn't like it. It was that in Nevada, a herd of cattle got infected by bird flu. I didn't know that birds flying over them. I don't know enough about it. I didn't read the story yet. Could do that. And the question is, if it did it, what does that do for the chain? When birds get it, we cull them. Are we going to be culling cattle? I don't know. But I want to bring it up to you, and you should read about it because I don't know enough about that. Enough about it to know how serious is this? Is this a freak thing, or is there more to it? Keep your eye on Bitcoin. It could still be coming down towards the 92,000 level before all is said and done. Tomorrow, we're going to get some information. You're going to get the Challenger Group coming out with their January planned job cuts. Now, you saw today ADP numbers came out. And they were much larger than anybody thought, the 180,000 area, okay? People weren't looking for that. They were looking for the 150s. So you got even more jobs. Are we going to see that the cuts are less, more? That's going to be important. Jobless claims have been doing a very nice job of staying in the low 200,000 range. They're still looking for that tomorrow. We're going to get the preliminary non-farm productivity data. That comes out at 7:30. So you're going to have in that first hour an awful lot of information. Then coming up at about 9:30, you'll get your EIA numbers. But remember, you're getting earnings and other things coming out throughout the day that will impact the stock market. So you want to pay attention to that. When we look at the S&P, you haven't gone back up for new highs. You're marking time. You can see that right here on a closing basis. This market hasn't gone anywhere in a short period of time. It's not this running market that we had like an area over here. When you open it up and you figure out what's made it up versus the closes, which is what that other chart is, you can see you had a spike high, a spike low, and you're sort of caught in between those two right here. You have a pattern of lower highs and lower lows. So the trend is down. The market keeps hitting the 18-day average. It's done it 3 days in a row. Let's assume that the market can pick up here and take out this high right here. Big deal. Would that give me an uptrend? It would not. I can see that would be a contract high. So we know the market's bullish, but it's not a tradable high. Tradable highs are ones where you have higher lows, higher highs. You're coming in on the pullbacks. You wouldn't have that. Right now, the bears have the swing line down. The buy is up. It's about as neutral as I know how to look at a chart. If you go up, 6,200 level, 61.98 at this point is the upper Bollinger Band. That's where the resistance would be in. Clear these highs, you're sure to get people that are short going, oh, I'm wrong again. Let me out of the market. That's what I would think. Doesn't mean I'm right in what I'm saying. And momentum-wise, the market is drifting down. This chart's a mess. It's not an easy chart to say there's a trend off of. And it's the same darn thing in the NASDAQ. You're caught in the swings back and forth with the swing line down. In this case, it's not with lower lows. Now you got higher lows, lower highs. So I contend you're going to narrow in just like that as the market goes on. The Dow doesn't even have a trend. You have the higher high, lower low. And as you can see, it came down, made a run for the 18-day average, held that zone, and it's bounced away. And it's kept the bullish embedded reading. That's the important thing. Until the red line closes under 79, the bias is still to the upside, a strong upside. When you come over to the Russell, you don't have that. You have an overbought market at this point in time. You still have one of the numbers, as you can see here, under 80. So it hasn't embedded. You keep fighting battles at the 100, the 18, and really the upper and lower Bollinger Band. If you throw off the moving averages, you could see that's really what's contained the market, and you're spinning with it, all right? And you're nowhere near the highs like you are in the other indices. That's the important thing. When we come to the 10-year notes, where did this come from? Look at how this market just started coming alive. You can't count tonight's action because we don't know how the day will finish tomorrow. But both numbers were over 80 on Wednesday. They were both on Tuesday over it. They weren't the day before. If you finish strong tomorrow, you could get another embedded reading, and it could be driving prices up even higher, taking interest rates even further lower. You'll get this market very excited when and if you're like at 443, 443 and a half. That will get traders going, what the heck's going on here with interest rates? They thought they were going higher. They're actually going the other way. When we come to the 2-year note, I don't see a trend. You have a lower low, higher high. The market is clearly caught between support of the 18-day average, resistance of the upper Bollinger Band, the black dashed line, and you are overbought. Any reading with a 7 in front of it is overbought in the market, all right? Embedded means they got readings with 8s and they're going sideways or higher. The dollar just pulled its plug. You double topped up here. I did not expect that. I thought you would pull back and find better support at the 18-day average. Instead, you've just slid right through on the way down. And I guarantee you there's people tonight pouring over their charts saying to themselves, was that it in the dollar? Could that be the case? Well, in order for that to be the case, the euro is going to have to go up because 57% of the dollar weighting in the index is the euro currency. So this has got to move higher. If it doesn't, then the dollar's not done. We're going to find out. The trend is down, the bias is up, and again, I think traders are scratching their head. The British pound could make a run here to the upper Bollinger Band. Tomorrow, we get the Bank of England announcement. So I want to see what they're going to say, what they're going to do, what are they inferring with interest rates. A good thing not to be in going into that report. Then, as you can see, you're coming down. So I said 92. I made a mistake. Maybe you make a run for the lower Bollinger Band of 95,600. I was looking back here when I was doing my study. I know where the 92 stuck in my head. It came from that number. So let's call it 95,500 level. If it wants to go further down, that's where this market could take it. Then we look at the energies, and you're making a stand. The market got down 5 days ago, roughly, hit the 200-day average, and it's just sort of stalled out there in an oversold condition. There's nothing bullish other than it's trying to hold and it's oversold. That's all that I could say about it, but I can see why the pros have come out. And you're sort of giving that up in the in the WTI, that's what I meant to say. But when you hit now 3 sessions ago, the lower Bollinger Band, that's where I think the pros took money off the table in a big way. If it falls again, I'd look for the support 70.42 to, let's call it 70, the lower Bollinger Band. Do we have an embedded reading in the making? Follow me. Can't count today. We don't know where it's going to finish. Both numbers were under 20. Both were under 20 on Tuesday, and both under 20 the day before. Yeah, so you're embedded. So now the question is, on good rallies, does the market get sold by the pros? It won't if you take out the lows of Wednesday first. That's my opinion. In the heating oil market, you can still, why not come down? Everything else is falling to the 235 level. Resistance right now is 245, but everything looks lower right here. And all you've done is you've had a great rally off the 200-day average in the nat gas where the market was oversold, held it, and now you're into a big resistance area of the 18-day averages again. I don't see why this market's ready to pick up and run. It could. The trend is up. The bias isn't yet. You're right at the cusp of it has to decide what is the next step for it. And what I'm seeing in this market is we're back to using pivot points. Why? So many of them are just doing this now. They're caught in these bands and going sideways. That is what a pivot point is all about. Pivot points are used when you're looking to day trade. They can be used when you're looking for a point of entry to carry a trade, but they're not valid from day to day. They're valid for the session that you're in, and that is the end of it. But you use the prior day's open, high, low, close in the formula. I tie it together with stochastics, and I created for you a video series that teaches my theory on it. And when you put it all together, you start learning how to work with this from my point of view. So it comes together, you learn what the pros are, I think, doing, how I've used it for, 30 years minimum. We'll see what that offers. IraEpstein.com. It's under the word free offers. You can go right into the pivot point series and it's there for you. You can also, if you go into our futures trading kit, it's there as well. You can move your cursor to the top here. You'll see an icon. Give it a click. It'll take you to the free offers. I'm Ira. I'll catch up with you all in the morning. Have a great evening.